In this quarter's Dublin Economic Monitor, we're reflecting on an economy that has been rolling from punch to punch over the last number of years. 2023 has started in a similarly uncertain period with lots of economic headwinds, probably more headwinds than tailwinds. But we would expect that inflation and energy costs have started to loosen their grip. And so when we mix all that together, we see an economy that looks set to continue growing in 2023, albeit by a reduced rate. We expect an average maybe 2 to 2.5% in the year ahead. Key things we're watching in this quarter and beyond will be where the labour market goes. That's been a particularly buoyant indicator over a number of the editions of the Economic Monitor, but we are starting to get a sense of a softening of the labour market, and we're aware of the announcements in the tech industry about potential job losses. So that's an indicator we're tracking with interest. We are starting to see a little bit of softening as well on some of the job indicators data in terms of new listings. The uncertainty in the economy at the minute and the outlook for where we go next is borne out by consumer confidence being quite low and business sentiment now starting to track lower too. With consumers, their confidence levels has seen evidence of them maybe delaying big ticket items and reports that they're going to maybe cut back on desirable goods and pivot towards essential items. There has been a slight uptick in consumer confidence in the most recent indicator, and we feel that's maybe tracking through to the measures in the budget that relieve some of the pressure on energy prices. Businesses, however, are starting to indicate that the year ahead could be slightly more volatile. They see costs in energy and they see costs in labour being particular challenges for them. And the wider competitiveness story for the economy remains one of a housing shortage and what that means then for the availability of labour. We're seeing increasing reports that housing and the lack of supply is still impacting and will continue to impact for some time on the overall competitiveness of the economy, giving employers concern about how they attract labour. Activity levels amongst Dublin businesses remained reasonably stable towards the end of 2022. There was a mixed picture across the sectors, as would be expected in the run-up to Christmas. The services sector performed well, with people obviously engaging in retail and hospitality. The manufacturing and construction sectors were in contraction mode at the tail end of 2022, reflecting some of those uncertainties, particularly the inflationary challenges and the energy challenges that we've seen over the course of the year. Dublin retail spending was broadly stable in Q4 2022, and we've seen rates now over the last year of about 6% growth, which would have been what we would have expected pre-pandemic. So we feel that spending is in a more normalised state. Obviously, there's inflationary impacts in the story, and we're seeing sales values up. We would need to then consider what's happening in sales volumes, and we think there's obviously people are spending more to get less. That's typically what happens in an elevated inflation situation. But across the metrics that we track on the spending pulse, necessities and culture and discretionary spend, there's growth right across all of those, so an encouraging story nonetheless. Despite a recovery in tourism generally, which has seen passenger numbers in Dublin Airport come back up to close to pre-pandemic levels, tourism spending in Dublin has been pretty stagnant over the last quarter. A key contributory factor to that has been the decline in spending by American tourists. But on a positive note, the spending by visitors from our nearer markets such as the UK, Germany and France has posted strong double-digit growth in the sort of mid to high teens. So overall, we feel this is a period where the economy is facing into yet another storm, but it's a storm that can be weathered. There's some key fundamentals that are aiding us through this period, such as the labour market. Consumer spending seems to be resilient, and we would expect the year ahead would be one where the economy continues to grow. The headwinds that we're tracking to see if they impact on growth will be obviously the housing completions and the lack thereof, and we're also starting to get slightly more concerned about a softening in the labour market. But overall, we think the key issues that have been impacting on the economy in 2022, namely inflation and energy costs, will hopefully have loosened their grip, and the year ahead will be one where growth can continue.